Hi there, traders. It's Thursday, November 5th, 2020, and your cherry bomb trade is in for today. We are going to be doing a naked option today. So if you like naked options, right, then you're going to like today's cherry bomb. We're going to be in Twitter. Twitter has a liquidity rank of 4 out of 4 and an IV rank of 30. It has already bounced back off a low, so you might be feeling like you missed the ride up. But then again, timing it perfectly, virtually impossible, right? So we're also going to take a look at a couple of management opportunities of trades that we should probably do something about today. So stick with us because we're about to hop into our platform and get going. But first, allow me to introduce myself. My name is Neil, and this is Option Theory, and I want to welcome you and thank you for clicking on this video. I do appreciate that you given this a try. Whether or not you're a returning subscriber or someone that's new, happy to have you here. All right, so on screen here, you can see that we're inside of ThinkOrSwim, our simulated trading platform, where you can go ahead and get all the learning with, with you know, fake money, paper money, right? Without any of the real risk. So what we do here in this channel is we build out a portfolio of trades, mostly using cherry bombs that come from Tasty Trade. So if you want to get those, head on down to the description and sign up with the link down there. It takes you over to Tasty Trade. Sign up with them, not with me. All right. So let's see here. We have our portfolio here. This IWM is probably going to be one I want to close today. It's an iron condor and it's right in the middle, and we're at 22 days to expiration. So with the Russell moving up here today, this might actually start to lose a little bit today as we begin to test the calls a little bit. I'm okay with that 21-ish days, 22 days, taking roughly 35% off. I'll take that, right? 50% of maximum profit or 21 days. I'm going to count this as 21 since it's moving. It's on the move. All right. So TLT did fill for us, and like I said in my iPhone video yesterday, my mobile app video, for whatever reason, TLT gives me a delta of NA, and then it messes up the whole portfolio, so I can't tell what my beta-weighted deltas are now. So it's almost like anytime I see that, I'm gonna be like, all right, guys, pass on today's video. Makes me a little crazy. I mean, I guess I could do the math and whatnot, but all right, I'm gonna take a guess that we're negative deltas, right? Um, so we'd like to see the market come down, and it's not. And so that really brings us to our other candidate that we need to manage. We have a naked put in VIX, and VIX is down 10% because apparently the market digs what's going on here in the US. So we're going to feel some pain on that one today. Even if we took it off right now, we'd be losing $62. But you can't go long the VIX, right? So this one's going to be something most likely we're going to have to take a loss on this one. All right. Unless something crazy happens today, which probably not. All right. So with that said, we'll come back and take a look at those. But what we're going to do now is build out today's trade. Today's trade is going to be in Twitter. So let's pull up the Twitters. Right, there's the chart. There's the big drop in earnings that Tom Preston mentioned in the email, right? And now, of course, because it gapped down and then had a big drop, naturally, was on sale, so people started buying it. Now, will it move up to its mean? Who knows? Let's take a look at what we can get if we sell a naked put on this one. You can see that I had an iron condor in here, so let's remove these price slices from a previous trade. Let's go over here to the Analyze tab, Add Simulated Trade. We're going to be in the December monthlies, and we are going to sell, I believe it's the 27 put. Does that look right? That doesn't look. 37 put. That's right. 37. 37 put. I'm like, wow, that's a little crazy. 27 is not where we need to be. So let's take a look. 37, we're at a 19 delta, right? And we'd collect anywhere between 91 and $1, $10 wide, $10 wide, 10-cent wide bid-ask spread here. So not particularly super duper liquid here. Open interest, that's pretty good number, right? That's good. So it's good chance we'll get this guy filled. All right. If we collected, closer to $1, which I have to be honest, I don't think we're going to do, because if this moves up with the NASDAQ, right, this is going to go lower in price. So if you want to collect that dollar, you're probably going to have to move your strikes up. All right, let's just build out the trade as it is. I'm going to left click on this bid, and let's put in a mid price of, okay, let's go 5 cents up, 96 cents. All right. In case you're wondering how I arrived at the 10-cent wide spread here, let's go halfway up. That's 5 cents. 5 cents from 91 is 96. So there's our one contract. Make sure yours is the number of contracts you'd be interested in having. And we know that this is going to be our max profit, right? So 96 cents. Let's go over to the risk profile and see what our probabilities are here. We have a 12/19 as the expiration, but our date's not there. So let's change that to 12/19. When are they going to know that for me? And now our price slices are wrong. Let's get these gold price slices where they belong, which is at break even, at expiration. And here we're looking at an 80% probability of being on or to the right of this gold line at expiration, right? And just as a quick tip here, you can see what's called 36 or break even. It's not, it's slightly, above that. But if you go back to this screen here, the ad simulated trade, and look at our break even, and you look at the delta for it, the delta here is 15. Multiply that by 2. 2 times 15 is 30. There's a 30% chance that roughly a 30% chance that Twitter is going to test our break even, right? Or a 40% chance that it's going to test our strike, right? Where we begin to lose that max profit. All right. So now that we understand that, right, 36% chance, the probabilities are probably going to even be better if we decide to go with a 37, if we get filled on the 37. So keep an eye on this one if you can, to see whether or not your trade gets filled, or if you need to move your strikes up, or just accept a lower price for your 37. All right. We now know all that good jazz. So I'm going to right click this trade. I'm going to choose confirm and send. Reviewing our max profit of 96. We'll look to manage that when we're at, let's call that a 48-cent profit. A $48 profit would be where we'd be looking to take this off. Yes, we have what some would say undefined risk to the downside should Twitter go out of business in the next 43 days. Then we could lose $3,600. I feel pretty confident that's not going to happen, that we're going to go out of business. But hey, once again, all the learning, right? So taking a naked option, then you have a little bit more opportunities when it comes time for trade management. So let's hit send. That's going to put that in my working orders. What I want to do now is take a quick look at management here. So my IWM, my iron condor, I want to do is right click that, choose create closing order. I want to buy that iron condor back, 41 cents. Thank you very much. There it is. I'm going to hit confirm and send that one. So now it's in my working orders to buy that back for 41 cents. I also want to take a look at VIX. VIX here. Yeah, okay. I'm going to take a hit on that one, but I'd rather get out of it because I feel like we're going to see, I don't think we're going to get that pop yet in volatility. Or granted, we could if something happens with this election results, right? I'm going to choose create closing order. Going to choose to buy it back for $1.90. Hit confirm and send then send again. Now I've got a few working orders here, and hopefully those will fill, and I will dip out of VIX before it hurts too bad. Maybe. All right, everybody, if you've made it this far into the video, big thumbs up to you. Thank you so much. If you think I've earned that thumbs up, I'd love it if you hit that thumbs up. And I'm wondering, how has this week been for you? Did you have to manage any of the same trades I just managed? I'd love to hear from you, so please don't be shy. Send a comment below. All right. If you haven't yet subscribed to the channel, it's okay. We're going to be here. We're going to keep doing this. We'd love to have you. And at some point, if you do subscribe, would you hit that bell? Because when these videos come out, it's important to get the trade on at a timely, in a timely fashion. All right. Until I see you in tomorrow's final cherry bomb of the week, happy trading, everybody.